this is Jim Pearce with a PF Pro video update on Wednesday, October 31st, 2023. Today is Halloween, which is an apt metaphor for how the stock market has been behaving lately. Each day, we don't know if we're going to get a trick or a treat. What we do know is that Wall Street is spooked and ready to ditch its candy bag at the slightest hint of a goblin. That mentality has lessened the multiples that investors are willing to pay for stocks and reduces the time premium portion of call options. Time premiums reflect bullishness, which these days is hard to find. The combined effect is a slight decline in our equity and option positions, as shown in the table below. I don't think the pessimism currently gripping Wall Street will last much longer. If the Fed does not raise interest rates tomorrow, which is what most economists expect, then the near-term direction of the stock market may be largely influenced by the fiscal 2023 Q4 results and guidance released by Apple after the market closes this Thursday. There are reasons to believe that Wall Street is beginning to feel better about the future direction of the stock market. During the past week, the CBOE Volatility Index, also known as the Fear Index, has declined by 10% and is now below 20, which means less portfolio managers feel compelled to buy put options on the S&P 500 index as portfolio insurance. And here I'm going to show you a chart of the CBOE Volatility Index. Here it is year to date, and you can see since about mid-September it's really spiked up. But now if we look at the past month, it peaked about 10, 11 days ago, but it looks like it is topping out and is starting to fall back. At the same time, Apple, which releases its quarterly results in a few days, again, has been on mostly a downward trend. If we look year to date, you can see it also peaked around the end of July and has been down. But again, if we look at the very recent trend, you can see that since about 5 days ago, as we head into its earnings release, starting to creep back up. Now, the price of oil is also dropping from above $90 a barrel 2 weeks ago to below $82 today. Lower energy prices are a net contributor to the economy. So is the end of the auto worker strike, which means the big three domestic car makers can get their plants back up to full capacity. So here is crude oil. Again, if we look year to date, we can see, let me get you so you can see the date here. Oops. But you can see, at the end of September, well over $90 a barrel. Now let's take a shorter term look. You can see near $90 a barrel as recently as about 11, 12 days ago, but especially in the last, say, 3 or 4 days, is a noticeable decline. Even the US dollar is getting into the act, strengthening against most major foreign currencies this week. It's not a dramatic change, but is a step in the right direction. Slowly, the pieces appear to be falling into place to sustain a stock market rally over the last 2 months of this year. And by the way, here's just one example of the euro to the dollar. And up here you can see the euro is the first currency mentioned here, which means it is going down, and therefore the dollar's going up. And you can see euro started to bounce back. Excuse me, here, look at these dates from about early October through the 23rd. But over the last, say, week, dollar once again is strengthening. So all of those micro trends could have a huge impact on the 29 call options in our portfolio that expire in January. Although 4 of them are currently showing triple-digit gains, most of the others are presently in the red. However, a change in sentiment on Wall Street combined with a solid holiday shopping season could push many of them into the black. And that's this month's PF Pro video update, and I look forward to talking to you in another month.